What's up, everybody? Welcome back to the Seven Figure Flipping Podcast. This is Bill Allen. This podcast is my Blackjack 2020 year in review. So Blackjack Real Estate is my real estate company. We flip and wholesale houses around the Southeast. And this year was a interesting and strange year for us. You'll hear some huge wins for us, some huge failures for us. And I'm also going to share kind of the path that we're going, the change that we're making, and a huge pivot that we made inside the company. So here's what we wanted to do last year, or this year, 2020. So we wanted to get our EOS, so Entrepreneurial Operating System, the EOS system that we operate off of, up to 80%. So we wanted to get at a level of 80% strong in EOS. We wanted to do 1 million in gross profit in outside of our three main markets. So new markets, basically, 1 million in gross profit in new markets that we weren't in. 15% of our closed deals all around come from new marketing channels. So we're trying to develop new marketing channels like texting and cold calling and all that stuff that we weren't doing before. We wanted to document our core processes and have them followed by everybody in the company. So documented in a system, video trainings, those kind of things. We wanted to do 2 land or multifamily deals in 2020. So land development deals where we put some land under contract, develop it, potentially sell it to builders, and then multifamily deals. So 2 of those total. And then 50 deals using a new offer tool that we were creating. So we had this vision, Nate and I this year and the team, to create a new way of offering on properties and doing 50 of our 200 planned deals that way. The big picture goal was to do 3.5 million in gross profit. So remember, this is January 2020. So we had no idea what COVID-19 was. We had no idea what this year was going to bring. And that was our plan, sitting in a room in January together. So how did we do in all that is the question. We actually took our gross profit goal down from 3.5 million to 2.75 million after COVID happened, and we saw some changes and things like that in what we could do, and the response rates, all of those things. We realized that they probably weren't going to hit 3.5 million, so we took it down to about 2.75 million as a company, and we planned on doing 200 deals. That was the goal. So how did we do? EOS. So Entrepreneurial Operating System, I feel like we're strong there. You know, we haven't gone through, we'll do it in January, gone through and taken kind of the assessment, the self-checkup, those kind of things. But one thing that I did notice as we were getting towards the end of the year, and I'll talk about where we're going as a company and some changes that we made. But what I noticed was we were having a lot of red on our scorecard. So we use a software called My Traction Tools to track our EOS meetings and run our EOS meetings out of, and people update our scorecard. So we have metrics, KPIs basically for every different department. And I noticed a lot of red. So if we're above the mark, above the goal, it's green. And if we're below the goal, it's red. And I just popped in there and said, you know, it's pretty obvious why things aren't going so well. These are all red, like all of our KPIs, all of our metrics, all of our numbers aren't getting hit. And if we don't hit our numbers, we're not going to get the output that we need, right? So that's one thing that I noticed. The rocks were getting hit, most of the time. So quarterly rocks we create, and I think we're probably below 80%. If I had to give us a score, I think where we're really strong is our core values, our processes and systems and procedures and things like that. Where I think we're a little bit weak is hitting those, like setting the targets, setting the marks and hitting them, and really figuring out how to do that. And so this year was, and again, the accountability chart is going to be something that I talk about. So I think we probably didn't hit that 80%, but we'll see. We'll give ourselves an assessment throughout the company and see how we did. But we're probably pretty close. If we're not at 80%, we're probably in the 70s. So I feel good about where we are there. I think there's always room to improve on our EOS execution. $1 million in gross profit in outside markets, so new markets. So we did go into some new markets this year. We went into 3 or 4 new markets, but we did not hit $1 million in gross profit. We saw some resistance there. We saw some challenges that we had in a couple different markets. And we did deals there. We probably did 20 or 25 deals in some of these other new markets, I would say. However, it was definitely an uphill battle for us, and we actually turned off quite a few of them, which I'll talk about kind of where we went towards the end of the year after we go through this. But that we did not hit that. 15% of our closed deals from new marketing channels, we did well there. So we definitely hit that one. We brought in some new strategies, some new ideas. Heather did an awesome job in the marketing department to get new ways of getting deals and deal flow outside of what we were currently doing. We knew we had to shift up the marketing a little bit. Core processes documented and followed. I feel like we hit that. So there's a lot of work this year on documenting the core processes and hitting them. 2 land development and multifamily development deals, this is a very exciting place for us. And you'll hear kind of some of the transition that I'm making in Blackjack and why towards the end of this podcast. But we have two land development deals under contract. They didn't close this year, but we've been working on them. Nate has been doing an amazing job working through those. So we started kind of, marketing and talking to people with bigger land. So like 100 plus acres here in Nashville. We have a smaller one under contract, 20 acres or so. And what we're doing is we're converting that from agricultural to residential, and then determining what we're going to do with it. So whether we're going to fully develop it, put a bunch of money into it, or just turn it over to a developer that can do those kind of things will determine our profit margin. But taking that and doing the conversion, making the changes, getting surveys, submitting all that stuff for review, the plans, the plats, those kind of things, and then selling that to a developer for a large profit. And then the developer will take it, chop it up, potentially sell it to builders, build on it themselves, those kind of things. So we have two of those under contract, but they didn't close. But the multifamily side was really exciting. Chad King, who you guys know, he's been on the podcast a bunch. He helps out inside the mastermind group. He made a shift away from our business over to multifamily and sales coaching this past year. And he came to Nate and I and said, I want to do some multifamily deals with you guys, some apartment buildings. And we were able to close a 21 unit down in Huntsville, Alabama. And we also have a 49 unit in Chattanooga that is closing today, as I record this, Wednesday, the 23rd of December. So two multifamily deals were closed. And the exciting thing is that deal that we did in Huntsville, we renovated it and we're actually selling it today on December 23rd also. Somebody from outside the area came and brought us a great offer that we're going to make a couple $100,000 on. And we decided to take it and take that money and move it into some of the bigger stuff that we're doing. We were also able to close a 93 unit building here in Murfreesboro. So we did 3 multifamily deals this year, and with a goal of 2, and 2 land development deals under contract. So that was exciting. I think you'll hear some of the transition and shift that we're going to make inside the company is because of this. There's large profit margins there. There's some really great tax benefits. There's some really cool stuff that's happening in that world for us. So that's really exciting. So that's a big win for Blackjack and me and Chad and Nate this year and the whole team. And so then the last one is 50 deals using a new offer tool. So we struck out big time here, and we put a lot of research and development into this. I'm not going to share exactly what we wanted to do because we were talking about it inside the mastermind group here soon, and maybe somebody's going to take it and run with it. But what we wanted to do is we wanted to develop, our plan was to go nationwide and be able to offer on properties anywhere. We get leads all over the place from pay-per-click traffic and other people sending us leads and addresses and all kinds of stuff. And so we wanted to have the ability to close a deal over the phone in any city in the United States and be able to exit that property, sell it, assign it, do whatever we want, rehab it, whatever it was. And we had a plan to do that. And we probably sunk as a company, probably $250,000, so about $250,000 in labor and software and all the different things that we wanted to do over these probably 6 or 8 months. So we started doing this in January and developing it. And then what happened was when COVID hit, we saw a change in what was happening, and the company wasn't making as much money, but we're still developing something for the future. So I thought we would see a little dip and then come out of that. And we were just kind of spending on this. And this was the way of the future for us. And I don't think it was COVID-19 or anything or the change in the market at that time. We had a couple months that just kind of like people just stepped on the brake and then they stepped on the gas really hard after 2 or 3 months, right? Like a lot of you flippers are seeing now, your properties are flying off the shelves. You'd wish you had more inventory. So I think for us, I'm going to talk about kind of some of the transition that we're making in Blackjack and why, but we were still having some personnel and people issues. So the accountability chart was really strong, but we had people basically trying to, we had key people leave the company. And when that happened, what you see a change of we're constantly trying to bring in new people, train them, get them up to speed, develop them, and have them perform like the folks that were senior that were doing really well. So when that happens, what you see is you really I needed to get more involved, and I didn't. And so I take 100% ownership for this because I was completely removed from the company this year. And I wasn't giving Nate the time that he needed from me as the visionary and working together and jumping back in. I think the companies that saw a lot of success this year, it's probably the visionary and the integrator jumped back in and did a lot of work this year to right the ship, to make sure that things are happening, things are working well. And so when the foundation shakes a little bit, and I was spending all this time at Seven Figure Flipping and doing different things outside of Blackjack and just leaving it all on Nate's shoulders, I think that was a big problem and a big issue of why we didn't hit some of these metrics where we could have. So when you have an owner and a visionary that it may be only working 2 to 3 hours a week, I knew that I needed to get more involved. I just didn't have the time or the capacity to do it. And a lot of the folks that, like, I see Andy McFarland just working a couple hours a week. Well, when something happens and you lose a key player or something big blows up or COVID-19 hits, right? Those folks need to get back involved more in the business. And I didn't do it. And so I take responsibility for a lot of the reasons why we didn't hit these kind of numbers and metrics. So where did we end up? We're going to be just around probably $2 million gross profit. So with a company that has over $1 million payroll, has expenses, has marketing costs, all that stuff, it wasn't a great year for me personally inside the company at $2 million. We need to make somewhere around $2.5 to $3 million for me to see a big profit. And so a lot of the problem was me not getting back involved. And I see that, Nate and I, so let's back up. Where are we going now? Like, what do we do about all this, right? No problem getting the EOS up to 80%. I don't think the core process is documented. Outside markets, what are we going to do? The land development, multifamily deals were a big win. We're going to see a lot of profit come from those land development deals. We're going to see some money come in from the multifamily deals and things. So that was a huge win for us to kind of prove that model for us that we can do that inside the company. The 50 deals using the new offer tool, I had to make a difficult decision about 2 months ago to sit down with Nate and say, okay, what does the future of this company look like? Is the future of this company the path that you want to take, and you see this vision of being able to push a button and make an offer anywhere in the country and sell properties? Or is it, hey, let's slow down and let's focus on what's really working right now and figure out what do we both want to do as visionary and integrator in the company? Do we want to work 80 hours a week inside the company, or do we want to slow down and make it more of a lifestyle business like we have like a bunch of other people have? So the conversation that we had was we sunk $250,000 into development for this tool, right? And we're almost there. And I basically made the tough decision to just say, pull the plug, just stop, like turn it off. Let's make a change. We have to make a shift, just because I'm not confident that, I think we can do it. I think we could go that direction. However, I just don't think either Nate or myself want to do that. And that's the huge thing that I hope that I can share with you and get out of this is we can build a company that does 500 deals, 1,000 deals. And that's the direction we were going. We were really kind of excited about that at one time. But with Nate doing a lot of, his personal journey, my personal journey, we both looked at each other and just said, neither one of us want to quit, right? Neither one of us want to throw in the towel, say, this didn't work, we tried it. I don't want to have to come on the podcast and tell you that I failed at this strategy, this technique, this thing that we were going to do, because my plan was exciting. I wanted to share it with the mastermind members. I wanted to tell them all about these incredible thing that we created and how they can help use it. And we can, dispose of properties all around the country with their help using their buyers list and stuff like that. It has exciting plan. And the fact that we had to pull the plug and take a step back, it was really, I think it was harder for Nate than it was for me. I saw the writing on the wall for a couple months, but I let it play out. I let him keep going. And I think the takeaway for me was that we weren't necessarily in sync. The visionary and integrator, we weren't meeting as much as we should have. We're not spending as much time together. I'm not, getting back into the business when I need to. And he felt a lot of weight and a lot of heaviness from him having to be the visionary and integrator of the company at the same time. So if you're listening to this and you're looking to hire a COO or an integrator or somebody like that in your business, and you're the owner, you're the visionary, those kind of things, you have to be the visionary, for it to work. I tried to hire Nate, put him in and just let him do everything. And he started to get frustrated and a little bit resentful, I'll say. Hopefully, Nate, if you listen to this, that's okay that I say. Like we had an awesome conversation about a month and a half ago, 2 months ago, where we sat down and we got back on the same page. And there was a lot of unsaid things, a lot of things that we needed to talk through. And I'm really excited about the direction that we're going right now. And I feel like we're back in sync, and it's not what we're doing now is not something that he's going to need a ton of me, but I'm there when we need it. So I'm going to have to put in more time with him, with Blackjack, spend time together on and off the clock, like at work and not at work. And we just spent some time together at our Christmas party and went out together afterwards with our wives. And it was really awesome to just kind of spend some time and not talk about business and just talk about life. So, okay. So where are we going? Like, what's the plan for Blackjack? We've been doing about 200 deals, pretty close to it each year, somewhere in the couple $1 million gross profit, and employing about 15 plus people inside the company. So about 2 months ago, what we did was we said, and maybe a month and a half ago, Nate and I agreed we need to make a transition. We need to make a change. And what is it going to look like? So I said, what if we could market, just reduce our marketing costs? What if we could have more of a business that is an administrative type business? Like, what if we could still wholesale 50, 60 deals a year, if not more? So 4 or 5 deals a month. We don't need to do 10, 15 deals a month. What if we could do less on the wholesaling and flipping side? And then what if we could, since we're doing these land development and multifamily deals, what if we could start doing more of those and bring our team into it? Because what it's been Chad, Nate, and me doing those deals right now without the team involvement. So Ashley's not helping in the transactions. Val's not helping in the lead flow. The marketing department is not helping drive marketing leads and things like that. So I said, what if we could bring that in? So now we have different ways to bring in leads, and we can dispose of those leads regardless of what they are. So could we market for larger multifamily deals? Could we market for vacant land? Could we market for houses, just like we do now? And what if we could have a smaller team that Nate could manage the team, right? So Nate could not spend 80 hours a week trying to do all of these deals, all these things that are happening. And what if we could just manage a team of 4 or 5 people? And Nate could spend 20 hours doing that. And then he could start working on the land development deals and things like that, and spending more time prospecting and looking for those things. And so we talked about it. We said that that would be really good. Nate would love to have a lower number of hours that are worked, and just kind of adjust to the structure of the business. So that's what we decided to do. We basically talked to the team. We have moved some folks from our company. Obviously, we have other companies inside the mastermind group that would be happy to have well-trained staff that are great at what they do. And we kept kind of this core team of folks inside the company that can do somewhere between 40 and 50 wholesale deals a year. We can talk to people about their multifamily properties, the vacant land that they have, and we have an outlet for each of those inside the company. So come January, our plan is to look at that accountability chart, figure out what it looks like, make some changes and adjustments to our marketing plan, and start filling the pipeline with lots of different types of deals. So if we can do 2 land development deals a year, like we talked about, we can do about 6 multifamily deals this year inside the business. And Val can learn how to talk to people on the phone about multifamily deals. And Chad can continue to do the sales on multifamily deals. And Nate can take these land development deals and run with them. And then we can raise the capital to get this stuff done while still doing our wholesale deals and our flips. So now, if the wholesale and flipping business can fund all of the salaries and marketing costs and all of that stuff for the administrative side of Blackjack, so Blackjack has a reduced payroll, reduced marketing costs, and reduced expenses. Now, if we can break even on that or make some money, so if we can do, let's say we do $1 million, I don't think it's too hard for our company to do $1 million in wholesale fees next year in 2021. Then if we can break even and make money on that, then all the land development deals, and some of those are $300,000 profit, $1 million profit. And all the multifamily deals that we do, which are great for us as individuals, so myself and Nate and Chad as general partners in the deals, what if we could do that, and then all of that stuff, all of the fruits of the multifamily and the land development deals become the profit margin of the company? It can be really, really profitable and be more of a kind of a lifestyle business for everybody on the team, where they don't feel like they have to work 60, 70, 80 hours a week. So that's the shift and change we're going to make. So I've been kind of, the last month we've been working on how to do it, talking to the team, talking to the staff. So that's exciting. I'm really excited about January with our annual planning and what we can do and what we can figure, like the kind of numbers that we're going to hit in 2021. And the reason that I wanted to make this shift and this change, I thought about it right when COVID hit, is like, what are we doing? What are we really good at? If we do need to make a change, where does it need to go? And it's not that we're jiving completely into the multifamily landscape. However, I've been doing this for the last 3 years as a limited partner. And now this past year as a general partner. When I talked about my personal stuff, I'll tell you, I've been able to add quite a few multifamily deals and get involved in those as general partner and raising capital for other deals and things like that. It's been really fun and exciting. And it's definitely a shift to add something on to what we are already good at, our core competency. So when something happens, we need to make a little bit of a change. And I saw this administrative hub, since we're already doing it, but we were carrying all the weight. Like, our team can do a lot of that stuff. And as we do more of them and we bring in more of these kind of deals, we need help. We need administrative help. And I didn't want to create another company, hire a bunch of other things. So we kind of made a shift and a pivot inside Blackjack to continue to do what we're really good at and what we're trained to do. And then train the team on some of these other things, like, small to mid-sized multifamily and land development deals. So I'm really excited about that. The other thing that I'm really proud of this year is that through COVID-19, we employed Blackjack Real Estate over 20 people this year. And through the first 6 months of this COVID pandemic, we kept everybody on the team. We made payroll, everybody got paid. People even got moved from city to city, and we were able to keep them on board and keep them staffed and all that stuff. So I'm really proud of that. The other thing that we were able to do is we had a goal to give away some houses. And so when I look at my personal goals, so my career goals, one of them was to give away 2 houses free and clear to veteran families and over $100,000 to charity. And so I was able to do that this year. We were able to, through the 7-figure flipping company, we were able to give away a house to homeless veterans with the Veterans Community Project. And that was amazing. We did an event called Veterans Live this year. We raised enough money through that event with all the people that helped out with it. We were able to give away a house to a homeless veteran. So a $35,000 tiny house that we built. And then Blackjack was able to buy a property, fix it up, and give it away to a Gold Star family. So really, really amazing that we were able to give away 2 houses this year. And we gave a bunch of other money to charity and lots of different support to the Brett Boyer Foundation, which is really close to my heart, local charity for CHD, heart defects for children. And it's just been a great year for that. Like, we've been able to give when a lot of people are having a lot of struggles, and there's so much going on in the community and all around the country that is negative. And we were able to be a light for some of that stuff. And so it's really exciting to be able to do that. So I'm proud of all of that. I'm so proud that I am able to run a couple different companies that employ people and are, making their paychecks, putting food on their table. That was the thing I was most scared about when I got started in this business. And it's the thing that really fills me up now, is to be able to support other families and other people around the country. And it's really exciting to overall in the 2 companies to have employed about 50 different people this year. It's just amazing to do that. And we're hiring right now. We're hiring like crazy inside the 7-figure flipping company. And it's really, really exciting for me. So all of this to say, it was not a successful year again in terms of hitting our goals, but we have to make pivots. We have to make changes throughout the year. And as a business owner, you have to make the tough decision. You have to decide the direction that you should go. I made the decision to keep everybody on the staff and just keep going right through the pandemic. And I had to come out of pocket for that. And I'm still coming out of pocket some months to do that. And I got to the point where I said, look, I can't continue to fund this company. We've got to get to a place that I feel comfortable and build something that we all want to do. And pulling Nate and I don't ever want to quit, like I said. And I could tell he was really, really hard-headed about just stopping this plan that we had put in motion. And sometimes you have to kill something. Sometimes you have to shut it down. And it's just, the writing is on the wall. And who knows, another 2-3 months, we may have gotten exactly what we needed and been able to hit go and do it. But I had reached my limit. And there's times where you just have to pull the plug. And I didn't want to, and he didn't want to, but we had to make the difficult decision to do that. And when we presented to the team, they knew that we we made the right decision at the time with the information that we had. So we're making a change, we're making a shift. That's some of the stuff that we're doing. I've got a couple, exciting things planned. I'm looking forward to sharing this inside of our mastermind group, some of the changes and things that we're doing with them. If anybody else wants to add something on to their business, I know we have a lot of members that are doing more commercial stuff that they're adding into their business, some multifamily things. It's really exciting to see some of the changes that can be made, and a lot of the strategies and tactics that we use in the single family world will work great inside the multifamily world. So I'm excited to bring our knowledge and expertise there and continue to do some of these off-market multifamily deals that we've been doing right now. So that's it for Blackjack. Some really great stuff that happened, and some things that weren't the best, right? And that's what business is learning from our mistakes, learning from what happened, and making changes and making adjustments. And I don't know where we're going to be next year. And I went back and listened to my year in review for 2020, my year in review for 2019 and going into 2020. And it was funny because I was talking about opportunity. I was talking about things come up in the year. We have no idea what 2020 is going to bring. And looking back, we definitely didn't, right? I was fat, dumb, and happy on a cruise in February with all the 7-figure flipping members, and life was good. Business was good. Everything was great. And then it was like got hit in the face, right? With this pandemic, this COVID-19, and lots of things have changed. And who knows what 2021 is going to bring? All we can do is we can set our goals. We can set our quarterly goals. We can bring them down to rocks. We can bring them down to to-dos. We can put them on the scorecard, and we can track as we go and make adjustments and changes. And hypothesize, test, and pivot. I love these 3 words. They're written all over my office. We're going to hypothesize about what 2021 is going to bring, what we can potentially do. We're going to test that, and then we're going to pivot. And we're making a pivot inside my business. And there it is. It's out there. You guys know. I'm looking forward to questions, what you guys think, some feedback, all that stuff. Give it to me. I want to hear it. And I'm happy to talk about it and stand by it for Blackjack. So that's what we've got going on. It's an exciting time for us. I love the team that we have. The foundation of our company is really, really strong. And I'm excited to see where we go in 2021. And to all the folks that, came into our world, were working with us in 2020, that moved on, there's not a single one of them that I have any hard feelings towards. I love you guys. It's been an amazing year. I'm so happy that I was able to employ everyone through, 6 to 8 months of this pandemic. And we did the best that we could, and we made some changes. And I know that we've pushed some people to start businesses. We pushed some people to start some training programs, pushed people to go to another company, recommendations, referrals, all that stuff. So there wasn't anybody that we had to call and say, hey, sorry, you're fired. It's just not the way that we do things, not the way that this decision came about. So we've been able to place people in other companies. We've been able to do some really cool things. And I absolutely love, when I look back at the folks that used to work for us, I see Dee Dee Huey building a bookkeeping business. Ryan Smith with Lead Smith is just doing some amazing things. And now Heather going out and doing a lot of her marketing stuff like that for members and other people out there. It's just amazing to see that. Chad building his sales business and his multifamily business. It's just really, really cool to see those folks. And I will say one thing. When key members from the company leave and move on, sometimes it takes, you really have to jump back in. You really have to focus on that. And I will say, Chad leaving the company was a big blow to the company. He really held the sales team together, really did some awesome stuff for us. And we didn't realize how big of an impact that would make. We thought we had very well-trained salespeople. And when you have a rock star like that, you don't necessarily know exactly what they do and how they do it. And their departure could be a very influential and impact to your company. So for all of you out there, as you're hiring and training and developing people, they're not always going to stay with you. And what you need to realize is, what is the impact going to be like? And try to hypothesize that. Try to actually figure out what that could be and fortify that, because we knew that he was going to move on and make a change. And we thought we could just hire a couple people, put them in, and get them rolling. And the sales folks, the acquisitions managers and salespeople that we have, they are a huge, the life of your business a lot of times. So that's one thing that definitely hurt us. And I'll be completely open and honest about that. And I'm excited to have Chad working on the sales and the multifamily side of what we do and be part of that. And he's just really amazing at what he does. And I think you guys have all heard that at Flip Hacking Live and on the coaching calls and things like that if you're in the mastermind group. The team that we have on the multifamily side with me, Chad, and Nate, it's really exciting. And we have a couple other partnerships with some other folks that we're in deals with. And I I love where we're going with some of that stuff. It's really great for my tax strategies, for my net worth, and those kind of things. So you'll be hearing a little bit more about that. Obviously, we're not shifting anything or changing anything here, doing 50 or 60 wholesale deals a year. We still have all those tactics and techniques, and that's what we're talking about here, primarily on the podcast. So if you guys want to hear something different, you want to hear some more about the multifamily deals and stuff like that, reach out, let me know, and I'll try to bring some of that into our world. So okay, I'm going to move on to seven-figure flipping. I don't know if we're going to break this up into 1 or 2 podcasts. We'll see, maybe 3. I also want to talk about my personal life and some of those changes that I've made this year, and some really cool stuff that's happened. But there's Blackjack in a box for you. A lot of changes, a lot of things that we're doing a little bit differently, and some huge wins and some disappointing failures of losing $250,000 to some research and development last year. It was a challenge, and it still hurts and stings to me right now. So there it is. I hope you guys enjoyed that. This is something that I look forward to and dread every year, and I think now you know why. Opening the kimono and sharing everything is a little bit of a challenge, but I hope you guys appreciate the openness and transparency that I'll give here to you at our events, Flip Hacking Live, at our mastermind events, everything that we do. I'm not just going to talk about the wins and everything great that's happened. I'm also going to talk about the struggles and failures and losses and all that stuff. So it wasn't a perfect year for me. It was definitely a very challenging year for me personally and professionally in multiple areas, but there were also some really, really great things that happened for us. So hope this is helpful. And if it is, let me know. Reach out, give us a rating and review on the podcast. Tell me what you thought. Take a screenshot of it. Tag me on Facebook, Instagram at Bill Allen REI. My personal page, if we're friends on Facebook. Shoot us an email, info@sevenfigureflipping.com. Whatever it is, just let me know what you think, how it's going. Your feedback is so important to me. It tells me that you want me to keep doing this every year. You don't want me to keep doing this every year. Whatever that may be, I want to hear about it. And ratings and reviews on the podcast on iTunes are incredibly powerful for us. I really appreciate them. And I have a to-do this next year in 2021 to start reading some of these reviews on the podcast in the beginning. So if you leave one here coming up, you might just read it on the podcast, give you a shout out and say hi.